Hello and welcome. You're watching Business Plus. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. Let's quickly begin with markets at close this afternoon. Joining me is Suyash Maheshwari. Suyash, markets ending in green?
Yes, Shweta. So markets extended their winning run to 3 consecutive sessions now. And even though the markets closed near its intraday high, the benchmarks were seen facing some sort of exhaustion at higher levels as Nifty faced some resistance at around 19,580 mark, its previous peak, which it touched on August 24th. Now, however, on the bright side, the benchmarks did not see any major pullback, and Nifty managed to defend 19,500 level throughout the session. Today's real winners, Shweta, were the mid-cap and the small-cap indices. Both scaled fresh peaks. Nifty Midcap 100 surged past the 40,000 mark for the very first time, and it also managed to close above it. Nifty Small Cap 100 on the other hand also surged around 1%, and it managed to scale a new lifetime high of 12,700. Now the rally in the broader markets has also improved the overall breadth of the markets, as nearly 2 stocks rose for every one that fell.
Okay.
Also, one of the things that we need to point out is that the volatility index, which is called India VIX, has seen some side of moderation. It fell about 1.34% in today's session, which in the short term could augur well for the bulls.
I don't see any change in sensex. Not sure if that's a technical error or with markets closed.
It's a technical error.
Flattish there.
Yes. So Nifty closed about 0.24% higher at 19,574 levels. Sensex was up 0.23% at 65,780 mark. Midcap 100 closed 1.06% higher at 40,253 levels, while the small cap index was up 0.84% at 12,656 levels.
All right, let's also quickly understand from you the top gainers and losers before we delve deeper into the phenomenal performance of Midcap as it astounds you or also astounds me, and we were discussing this right before the show started. But let's quickly first understand gainers and losers. And the triggers, of course, for those gainers.
So, Shweta, among the top gainers in the blue chips today was Apollo Hospitals. Now, Apollo Hospitals yesterday said that it will be adding about 3,000 more beds by the end of this year in its real-time monitoring program. Currently, it has about 1,000 beds. So, it was a major boost for the stock, and as a result, the stock rallied about 3%. Coal India continues to be among the top gainers for the second consecutive session after it saw a 13% bump in production in August. Sun Pharma was another stock which performed fairly well today. It was up about 2%. BPCL and ITC also ended with gains of over 1%. Now, among losers was Ultratech Cement, which fell about 1.5%. Dr. Reddy's, which was down about 1.4%. SBI Life, which fell about 1.3%. Maruti, which touched its all-time high yesterday, fell about 1%, and Eicher Motors, which was on about 0.73%.
All right, let's also quickly talk about sectors that were in focus this afternoon.
Yes, Shweta. So most of the sectors, now Nifty Media was the outperformer in today's session. It was up about 3%. And Realty Index also performed fairly well. It was up about 1%. The dampener in today's session was the Nifty Bank Index. The index has been facing some resistance near the 44,600 mark level, from which it has seen like selling pressure taking off. Nifty IT performed fairly well. It was up about 0.63%. It continues to do well and building on the gains of about 4% in August. Nifty Auto ended flat and it was down about 0.01%. FMCG and pharma stocks also performed really well. Nifty FMCG was up about 0.74%, whereas the Nifty Pharma Index was up about 1.1%.
All right, let's quickly understand some of those performances better. Joining us is Kranthi Bathini of WealthMills Securities. Kranthi, good to have you back. Let's first understand, markets ending once again in the green. What are the big triggers?
Yes, Shweta, markets are trading in a very tight range right now. Of course, it's a positive momentum. Markets are in a consolidation phase right now, what we can see. But the more about the action is right now in the mid and small cap stocks. And also, Shweta, the interesting thing is there is a 2-digit factor that's playing in the market. Stocks which are in the 2 digits, they have been jumping in last a couple of trading sessions. So there was some kind of fringiness that is building up, chasing in these kind of low value stocks, and also some kind of bottom fishing is happening. Stocks which have not moved, which have been laggards for quite a long quarters. We can see some kind of bottom fishing is bargain hunting is taking place at this point of time. It's the nature of the bull market. Whenever markets tend to be on a higher note and shows its resilience, and when the markets are at a resistance zone, we can see some kind of activity taking place in mid and small cap stocks. That's what we are witnessing at this point of time right now in Indian markets.
Kranthi, of course, today's story has been the Nifty Midcap 100 scaling its fresh peaks of 40,000, and we have been talking about the outperformance of the broader markets in general. Now, if you look at the 1-year returns, Nifty Midcap 100 has given about 27%, small cap index is up about 100%. The headliners, on the other hand, are up about 7%. So, do you expect the divergence to close anytime soon, or will the outperformance continue?
What we can see is if the Nifty is could able to sustain about the higher range, we can see this kind of outperformance in the mid and small cap stocks going to be continued for a period of time. And it's a nature of the market. When there is a the limited upside is there in the large cap stocks, then the money flows can go to the mid and small cap stocks. That's the tendency of the market always. And also we need to look at the data. Surprisingly, in the last 6 months, the foreign portfolio investors have been buying in the primary market also, which we have not witnessed any kind of strong IPO names in the recent past. But whereas the mid and small caps also, some kind of money is getting channelized in the primary markets. If you see the broader indices, the foreign portfolio investors again in the emerging market space, they have been the net sellers in the entire emerging market space, whereas in the month of August, FPI money has been positive in India. So we can see the strength, underlying strength in Indian markets. When some days when the foreign portfolio investors are net sellers, the DIs have quite active. So there is a kind of strong liquidity that is protecting the market. Buying interest is emerging at every dip in Indian markets. So when the broader base is quite strong, we can see the money flows getting channelized into the mid and small cap stocks. Here, the catch is one need to think about the stronger ones, because it should not be the case with every stock in mid and small cap space. If the earning visibility and also the management strength is there, then that are the pockets one need to be there. Otherwise, if it's becoming very fringy and the valuations are astronomical, that is the time one need to be cautious in mid and small cap space.
So talking about being cautious, Kranthi, what are some of the sectors, at least in the mid cap and the small cap space, that appear to be at least overheated for now?
At this point of time, we can see some kind of visibility with respect to the earnings are concerned. At this point of time, we don't see any kind of bubble forming situation at this point of time. It's purely we need to sensitize into very stock specific. At this point of time, majority of the stocks are trending at a fairly valued zone. We have not seen anything forming a bubble kind of situation at this point of time.
So any sectors that can be contenders for a re-rating, given that earnings are improving?
Yeah, the one of the key sector we need to see for a re-rating is the infra space, because the capex has been increasing, the government spending and the private sector spending has been going up, the engineering and the defense space has been buzzing, and this week we are witnessing stocks in the metal space also buzzing at this point of time. They have been exhibiting their strength in terms of the price momentum is concerned. So the infra was a majority of the last few quarters, they have been laggards, but right now we can see some kind of pockets of infra stocks has been rallying in the recent past. So infra is the space we need to wait and watch at this point of time.
And apart from infra, one group of stocks that also are giving great returns at this point in time are railways. Railways stock, including the Railway Finance Corporation, again at an all-time high this afternoon, closing almost about 8% up, if I'm correct on
so
the
in the
numbers.
last 3 days, the stock has rallied 40%.
40%. That's a big number. Of course, a great push for infra, for railways, and a capex that has been set aside by the government. All of that is turning into positive sentiment.
Absolutely, Shweta. Any stock that have a tag of railway, they have been rallying in the market. And in fact, some kind of people are running screeners. So what are the companies that are related to railways, and what kind of momentum we are going to see? Whether this company can take the advantage of the growth or earning visibility, order book that is trying to build up in railways. The screeners are running. So such a kind of fringiness is there in the railway stock. Of course, at this point of time, the stocks are fairly valued. And what we can see is the visibility of the earnings and the order book is quite strong. So in line with that perspective, we can see some kind of price momentum is building up with respect to the railway stocks are concerned. But I can articulate like this, Shweta, it's just like a musical chair. The stocks are in a momentum zone. Okay, so the investors need to think by the time the music stops, where they will be and which stocks they will be in railway space is concerned.
Okay, and
Now
since we are talking about railways, let me also quickly bring in coal into the picture. Coal stock has been doing well day after day. All of that also, of course, on the back of the fact that there is increased demand, increased production. I'm not sure climate activists are going to be very happy about that, but that is the reality.
Yeah, Shweta, you are absolutely correct. There was a ESG concerns earlier. So when the bull market is quite strong, the money always check for the bargain hunting. That's what the beauty of the markets, beauty of bull markets. So the stocks which have been laggards because of the various reasons, okay, they tend to participate in these kind of rallies in a typical bull market is concerned.
Now, Kranthi, since we are talking about all sectors participating in the recent rally, one of the sectors that has not been participating is the Nifty Bank Index. Now, what's the overhang on Nifty Bank? It has been an underperformer for the past 2 or 3 months, I suppose.
Yeah. What we have witnessed is the banking at the forefront. It's already priced in, and majority of the PSU stocks have been buzzing in the recent past. Whereas coming to the public sector, private sector banks are concerned, they are priced in, and they are in a consolidation phase right now. The money has been, they are fairly valued in terms of their valuation, price to book valuations are concerned, and the credit growth is taking place. They are going to join the party if the sustainability of the indices reaches on high. They are going to start the party. But right now, what we are witnessing in the market is the money has been channelizing, getting into the more about the bargain hands rather than the stocks which are fully priced in at this point of time.
Now, Kranthi, the volatility index India VIX has also come down by about 1.34% in today's session. How do you see volatility coming down? Will it augur well for the bulls or for the bears?
Yeah, that's a very interesting question at this point of time. But as long as Nifty could able to sustain the range of 19,500, and if it consolidates at this point of time without creating any knee-jerk reaction, we can see the volatility to be in a lesser range. But where the volatility come into the VIX index, the fear index will come into the picture is any kind of some kind of adverse news or the Federal Reserve action. These are the news can create the fear index to go up in the near future. But Indian markets are in a comfortable situation at this point of time. The markets have been ignoring the trends that are getting created, the tremors or the news that are knee-jerk reactions that are coming from China. Also, market is pursuing right now in favor of Indian markets at this point of time.
All right, Kranthi, before we let you know, an important piece of news that is coming in by the way of India's services PMI. The service sector expanded in August, albeit a little slower than July. According to S&P Global, India's services Purchasing Managers Index came at about 60.1 in August, lower than 62.3 in July, albeit still higher, still an expansion. Good news there as far as services sector is concerned.
Yeah, absolutely, Shweta. It's quite strong. Above 50 is a very good number, and above 55 is a phenomenal number. But 60 is it shows the underlying strength. That's what market could able to sustain at this 19,200 and that range. Market could able to strongly go above that range. It shows the underlying strength in the economy in terms of the earning visibility that's going to create for a period of time because of the PMI index. Normally, we do track the GDP, which was like the previous data, whereas the PMI is the forward index that shows the earning visibility of the companies going ahead.
Now, to add to Kranthi's point, Shweta, the reading of above 60, like the PMI index, the services PMI index has been in expansion for about 25 straight months. So even though there is a slight moderation, we have been in expansionary phase for the past 25 months, which is the longest run since August 2011.
Right.
So one of the points we need to point out.
Well, thank you very much for that addition. Kranthi Bathini, Suresh Maheshwari, thanks very much, gentlemen, for joining with your inputs. But we'll have to move on at this point in time. Shifting focus now to Unicorn India Ventures, which has now launched their third fund with a total corpus of 1,000 crore rupees. They've announced the first close of this fund at 225 crore rupees. With two funds under management, UIV has an active portfolio of over 35 companies looking to invest in many more. Joining us is Bhaskar Majumdar, Managing Partner at Unicorn India Ventures. Also joining us in the studio is my colleague Karthik Malhotra. Karthik, please do come in. Let me first take a question quickly with Bhaskar. Bhaskar, congratulations on the first close. Run us through some of the key takeaways.
So thank you, Shweta. So obviously, this is the third fund for us, and as you very rightly said, this is the first close we did at 225 crores. For us, this is the first fund where we have a substantial capital coming in from the US, and that has been a target area for us to focus at the US markets, the international markets and US in particular, as we look at raising the third fund. One of the biggest takeaways, I must say, that globally there has been a natural slowdown, especially for the VC and private equity markets, especially given the 6% tax regime in the Western world. However, so there is in general, there's a very strong headwind against VC as an asset class. However, it's ironical that at such a period in time, there's a very strong tailwind in favor of India. Wherever we've been talking, wherever we've been seeing at the larger global macro, given the slowdown in China, there's been a definite tailwind from institutional investors and foreign family offices towards any India story. So this was a very good balancing act because the geography story was a very good tailwind. The sector story was a general headwind. So between that, we did manage to do the first close, and we are pretty confident in the next 6 months or so, we would be able to do the final close.
Hi Bhaskar, good afternoon. Thank you so much for joining us this afternoon. I think the message that you're trying to give is fairly clear that despite the funding winter, we've seen that India still seems to be right now in the thaw mix of the funding winter. And the perception that you mentioned, I think, is also getting echoed by ratings agencies, by the likes of JP Morgan, by the likes of Moody's, by the likes of Fitch. So overall, India is much better positioned right now in the startup ecosystem, in the overall funding value chain. But there's still a dichotomy between, profitability and valuation. And what we are also seeing on the valuation front, Bhaskar, is the fact that that valuation is being underwritten in the books of many Indian startup investors. Why is that so?
Karthik, it's a great question. And fundamentally, what is happening is something which, we are calling it a valuation catch-up. What typically has happened is, especially in 20 21, latter part of 2020, and we all know the macro, there was COVID, the rates came down, people and the larger funds were flush with money. They all wanted to take in a higher risk, higher return asset class, i.e. the startup ecosystem was flush. And this was a global trend. So what fundamentally happened over there was valuations overran. And because valuations overran, companies were basically being valued at a much higher valuations than normally you could justify in a more stable world. Today, what is happening, the message that is going in some quarters is that, the startup ecosystem has slowed down. Well, the startup ecosystem is not slowed down, especially in India. What has happened is the valuations of some of those large companies which had overrun, there is a valuation, what I refer to, there's a valuation catch up which is happening. What basically means is a company which was valued at, X will now take another 2 years, 3 years to value themselves again at X. And what fundamentally is happening, if you look under the bonnet, is these companies are starting to improve their performances and having to justify themselves. And we are seeing that within this private ecosystem, at the real early stage, which is where we operate, there hasn't been much of a slowdown. You're still getting access to great companies. You're still getting access to very mature entrepreneurs who are starting off. The real slowdown, if you will, has happened in the more matured businesses, companies which are close to $1 billion, companies where their valuations are comparable with the listed space. And therefore, that is where the valuation catch-up is starting to happen.
So fair to assume, Bhaskar, perhaps if I'm getting you correctly, is that it's a correction and not really a downturn when it comes to devaluing of startups, which I think is a fair assessment of the situation. But Bhaskar, it's also important in the same breath to talk about some of the emerging sectors in India, and not just in India, in fact, even globally. So I believe that agri-tech, space tech, semiconductors are your focus areas as well, and these are focus areas for the overall India momentum also right now. So what is the kind of news that we can expect when it comes to UIV getting into funding? And I believe 25 startups are likely to be in your next funding cohort. So what is the kind of headline that we can see when it comes to some of these semiconductor, space tech, agri-tech startups that you're likely to invest in?
And perhaps also if you could break it down for us, how many of them are in semiconductor space, agri-tech space and space tech? Because there's a lot of buzz around space tech of late.
Yeah. So let me just quickly take a step back and give you a perspective of the type of businesses we invest. So as a fund, we don't invest in consumer internet. So we stay out of businesses which are, typically they need dollars constantly to keep reaching their business targets. So fundamentally, there are two broad themes we invest in. One is India for the world, which is, B2B SaaS businesses, homegrown in India and then going out to global markets to scale up. The second system, and for which we are known as, is we invest in what we call digital platforms, which are fundamentally companies which are using this mass scale digitization that we are seeing right across India in every sector, which are companies which are enabling this digitization across sectors. So whether it be health tech, fintech, retail tech, this is what we are known for. And therefore, our theme in the third fund has not changed. Some of newer verticals have been added. And that is where we are seeing more and more companies now within the agri-tech framework where we are looking to do. We are looking at investments in space tech. The launches which has recently taken place has clearly shown the capability of India to launch, less than a fifth to a sixth of what US companies or the US space technology companies have been launching. And there's a large number of very interesting early stage space businesses we are seeing. Semiconductor is a very difficult industry. It's a very manufacturing, capital intensive industry. So for a fund our size, we cannot be doing in the front end side of semiconductors, as in, in the fab businesses. However, within the semiconductor space, semiconductor, as you guys very well know, is a bit like the automotive industry. So, we are not going to invest in the automotive side of things, but we will actively look at investing in the design, in the auto ancillary equivalent fabless manufacturing side of things. So, we are constantly getting businesses within that area. We have retained on our advisory panel certain people with deep connects within the US semiconductor space, and these are some of the areas which we are looking at.
Since you mentioned fintech, I think, the sort of allure that we had of fintech back in 2020 onwards, all the way, I think, up till 2022, that is a sector that seems to have sort of, outlived its growth and valuation momentum. But in the same breath, Bhaskar, I can't help but mention JioFin. The latest offspring of the Reliance company, demerged in fact as JioFin, which again, since you mentioned, you are into the tech platforms, you're into health tech, into fintech, and this now specifically is at the cusp of Bharat and urban India, right? So it's going to be a giant which is actually going to ride on the massive wave of the existing Jio Telecom platform and is likely to further disrupt the entire fintech space. How are you as an investor looking at the entry of JioFin in the overall fintech space?
It's a great question. Fundamentally, what has happened in fintech fundamentally is, fintech companies mushroomed up much faster than the regulatory framework could catch up with. So fintech started to come. It was almost, there were fintechs and there was financial services companies, and the two were almost at arm's length. Once fintechs started to become more and more mainstream, and once the companies started to, become large, the regulators, and rightly so from a national perspective, started to bring forth within the fintech the same regulation that was there in the rest of the financial services. So, you could have four bright tech guys could launch a digital lending platform, and they were unregulated. Rightly so, RBI came with a structure where they said, the regulated entities have to exist if you are doing a lending. So then, only those fintechs which already were within the regulated framework, already those who had their own subsidiary NBFCs, etc., were the ones able to scale up. Today, what we are seeing is, if you will, the coming of fintech into the mainstream, or the other way of looking at it is the mainstream coming into the fintech. And that is where we see a player like Jio Financial coming, who are going to disrupt the whole thing. They are going to be the ones who are going to put in obviously the whole regulated hat of financial services, but rather than looking at the old distribution method, they are going to use technology, basically as a disruptor. And being an investor in the early stage fintech ecosystem, I think it's a great opportunity. Whenever Jio, Reliance, and or these large enterprises come into a particular sector, naturally, given the speed to go to market, they would be looking at building up their various platforms through acquisitions, through mergers, through various structuring, and I think that gives an opportunity to not just our portfolio companies, but within the entire larger startup ecosystem to grow on the back of these activities.
Any consolidation that you're looking forward to when it comes to fintech players, because there are so many of them in the market right now, and with a big entity like Reliance getting into the fintech service, it's going to cut into their markets. So any possibility of any sort of consolidation in the market as we speak right now?
Yes. It's a very good analysis. Obviously, we have seen that happen in the e-commerce market also. There was a sort of consolidation within the e-commerce market. Then you had not an equivalence, but then you had the Tata Digital come in and they acquired a majority position in Big Basket. I think a similar consolidation story will pan out in fintech. Fintech again is a catch-all word we use. Within fintech, there is multiple sectors. Some sectors like possibly lending, some sectors like trade finance. These may have matured, but there's a whole lot of sectors within the larger fintech, gambit, which again are still at a very early nascent stage. And for funds like us, which are always looking at newer sectors, which are always looking to invest where the big monies have not got in, we see a number of opportunities within the larger fintech. Just to draw a parallel, one of our marquee investments is a company called Open Bank within fintech, India's largest neobank. But when we invested in them, the word neobank itself was raw and unheard of in India. So, although the sector is maturing, within the larger sector, there are always, pockets which are emerging constantly. And that's our job, to source the sectors and companies.
But Bhaskar, do you see the neobank story in India actually maturing? Because I think practically every neobank out there that was, mushrooming in the 2020, 2021 era, seemed to have exited the market because all of them pretty much hit regulatory hurdles.
Quite a few of them did hit regulatory hurdles, but the ones within our portfolio, I must say, we're very matured to work alongside the regulator from day one, because we were very clear as investors and the company as founders that eventually financial services will come under the regulatory framework. So, there have been neobanks which are working very closely with the regulators and scaling up constantly. And
okay.
The other thing that is happening globally in the neobanking world, and I'd just like to take 30 seconds and explain, is basically neobank is becoming the aggregation platform for newer consumers to come into play. And it is after that you start offering services, most of which are in the traditional banking, to start to monetize. And that's where the India neobanking space is also exactly at.
Since we are talking neobanks and we are talking about a funding winter, Bhaskar, I think it's important also to note at this point that many sort of, pundits had said in late last year onwards and the run up until now that days of easy money are over. Now with with 25 more startups that you are likely to fund yourself and opening the taps to your third fund, is it fair to assume that even if days of easy money are over, days of money are not technically over? Startups are still going to get funded.
Yeah, I think it's a very good line, Karthik, you've used. Days of easy money are over, but days of money are not over. In fact, for funds like us, and again for matured entrepreneurs, I think we didn't want, but this natural slowdown that has happened in the cycle has been good in a way, because India being India, and we all know when there is a bull market, what happens, we almost started to see, AIFs and venture funds mushrooming up on a daily basis. I think that will stop. Investors in funds will look at matured fund managers, folks who have been there, done that, either as entrepreneurs or as senior execs. Similarly, on the entrepreneurship side, people just thought, it was a walk in the park entrepreneurship. They realized it's a long hurdle. So I think this natural headwind or the cyclical curve, whatever you want to call it, has been good for the overall industry. And there's a clear maturity in types of fund managers as well as in entrepreneurs who are now coming into play.
All right, Bhaskar, in a country where we often and very rightly celebrate unicorns and unicorn feature prominently in your company as well, we have seen a slowdown, and it has slowed down to a point where at this point in August of 2023, India saw its first unicorn in Zepto. My question is twofold. A, is this good? Is this bad? How do you read this? Although there's been some sort of slow growth or slow momentum as far as companies turning unicorn is concerned, there is greater push and thrust towards sustainability, profitability. That's number one. Number two, which are the soonicorns that one should be eyeing at this point?
Without getting into names of which are the soonicorns, I think today what has happened is investors and or the investment world is no more carried away by high marketing spends and the brand value of the companies. It is coming back to brass tacks of path to profitability, what the cash in the companies, what the core businesses are. And within that, we can see a number of soonicorns, within our portfolio, and I'm sure within the portfolio of other VC colleagues as well. Fundamentally, the moot point that has happened is, you're right, as I kept saying, there had been a valuation overrun. it had almost become that, you had to become a unicorn had become the holy grail for existence for a startup rather than building the business. And I think these are cyclical curves which we all go through, both in the startup world we go through, and we've all been through bull run periods in the stock market also. So that doesn't mean the stock market is going to die or doom and gloom about the startup world. It's just a correction of a natural cycle that happens, and that's what we are experiencing. I think the startup founders, the unicorns, all of which were there, have now become much more business focused. We are seeing it in our portfolio. Founders are much more focused at path to profitability, building teams, growing businesses, rather than always looking at the next round. So it's a natural correction which has already happened, and I think there's a learning for all of us in this.
All right, and before I let you go, for all young entrepreneurs watching out there today, what exactly does it take? What value in a startup does it take for Unicorn India Ventures to invest in them, to have Unicorn India Ventures back them at this point?
As I keep saying, you have to love what you're doing, get into it to build a business, create some value, and don't think about the exit and the valuation. That will come if you're building the business. And fundamentally, that's what it is. We are not backing entrepreneurs. We are not backing people who want to try out entrepreneurship. Entrepreneurship, we feel, is a one-way street. You got to burn the bridge of return and then only get into entrepreneurship. And for us, because we go in so early, we are always saying that early stage investing is an art and not a science. And therefore, that's the DNA of the entrepreneur we're looking at. Everything else follows from there.
All right, so you're looking for entrepreneurs that are artists and not scientists, perhaps people who are more innovative as opposed to people who are more technically driven. That would be my takeaway. Bhaskar Majumdar, thanks very much, sir, for taking time out for joining us on that story.
Thanks, Shweta. Thanks, Karthik. Good to
Thank you, Bhaskar.
Thanks for having me on.
Thank you. Shifting focus now to G20 and the big takeaways, of course, of G20 Summit that we continue to track here on Newsline. All right, as India is holding its presidency for G20, preparations are abuzz. National capital, New Delhi, is preparing to host heads of state from as many as 20 nations. Union Finance Minister today talked about expected deliverables in the finance and economy sector, emphasized on debt distress, reforms in multilateral development banks, cryptocurrency regulation, the digital public infrastructure, which of course is likely to be key focus areas for G20 Summit. We're going to talk about all that and more. Joining us is Rakesh Khar with Karthik Malhotra. What a pleasure to have both of you on the show after a very long time. These are good times. These are exceptional times. There's going to be a lot on the agenda. Let's quickly take our viewers one after the other as to what are going to be the most important bits that perhaps one should look out for while tracking, while reading closely into G20.
Thank you, Shweta. I think you rightly outlined the four key parameters of G20 in India. And G20's entire architecture and DNA belongs to the financial ecosystem. So in that sense, G20 and business and finance and economy are one of the same thing. But the interesting thing is that G20 in India, incidentally, has happened in a manner that it looks like it is the epicenter of geopolitics and geoeconomics. So we've been able to position G20 in India as a major proposition where the entire global economic order or the political order is being reset with India taking the leadership role. So a lot of effort has gone during the last 1 year, right from the time in December last year when Bali handed over the presidency to New Delhi with Modi taking charge. So I'm not too sure whether we'll be able to have a closure on all these four parameters. Debt restructuring is a big challenge area, with India and China being on the two sides of the divide. Similarly, on the issue of the reform of multilateral institutions at the global level, it's easier said than done. So that's a long haul, but yes, we will make the right noises. The big takeaway from my perspective from this particular summit in New Delhi is that India's export, that too in the realm of charity, I would say, that is, there's not a numerical number to it. It is in the larger influence domain, that is the digital public infrastructure goods. So I think when we talk of exports, when we talk of soft power, in that sense, it's a rare combination that India is positioning and rightly getting the buy-in on exporting DPI, which what we call now digital public infrastructure goods, to the world at large for the larger economic good of the world at large, which is one of the most important and repeatedly stated agenda of G20. So in that sense, G20 ticks the big ticket box of DPI export from India and major push and iteration of core agendas on the 3 other listed things that you mentioned.
All right, and since you've set the ball rolling, let's quickly listen into the finance minister as she spoke in Mumbai this afternoon.
Crypto threat as well as an opportunity, but crypto is also an example that I use later to say how, unless global cooperation works out well, you're not going to be able to have a responsible financial ecosystem which can regulate it as well. Drug and drug worlds, drug mafias, are also a big threat again to the financial ecosystem. Tax havens and round-tripping of resources, tax evasion, all these are also the threats that we need to work. Keeping in our mind, we need to work with these threats before us so that we can address them.
Tax havens, tax evasion, cryptocurrency, all of that, of course, we've been discussing, Karthik, every morning. But let's quickly talk about another aspect beyond that bite we have, which is adoption of digital public goods, including fast payments, which is what India is hoping to export to the rest of the world and hoping there's going to be faster adoption of India's own digital infrastructure, in a sense throwing its prowess overhand in front of other global G20 countries and establishing some sort of supremacy there as far as financial stability and inclusion is concerned.
I think, Shweta, there's no doubt, and Rakesh had also put it beautifully, before that bite of finance minister played out. But I think there's no doubt that India is already at the epitome of using technology to the hilt when it comes to making digital payments. And digital payments is not alone. When you talk about digital public goods or digital public infrastructure, the whole architecture on which it rests, called India Stack, is pretty much world class. And I think once the G20 leaders or their representatives descend down on India, and once they travel the streets of India, and if they're able to see the ease with which a UPI transaction can be made, it's a no-brainer. Any country out there will want to adopt it. But just to play sort of devil's advocate, while UPI scan and pay is something that we think that we have created great supremacy in, similar payments, tap and pay payments, are already available internationally. In fact, I was traveling to UK last year, USA the year before. You already have tap and pay services available on the same platforms. Let's say Google Pay has a different avatar, a different interface in India where there's a scan feature. Google Pay, or even Apple Pay for that matter, has a tap your mobile phone and walk out. Okay. Something very similar to what Vijay Shekhar Sharma launched yesterday, where you have NFC enabled devices where the same machine could enable you to either scan and pay or tap your card and pay or tap your phone and pay. Okay. So I think the world is also fully geared up when it comes to digitization and making these payments. But of course, I think the whole India Stack story, where your KYC, where your opening of bank accounts, where your biometrics which are linked on Aadhaar, the entire architecture around that is something which I don't think anybody else in the world has at that scale. And we're talking about 1.4 billion people on that India Stack. Well, almost discount the the infants and the toddlers, but otherwise you've got the entire population of the country.
I would agree with Karthi. Essentially within the India Stack, it is the jam trinity, which is the bigger export than payment gateways, because that slowly or grudgingly the world is taking to it a very big way. And most of the advanced economies anyway had a different version, but obviously we saw one of the key European ambassadors doing a UPI payment.
And being amazed at that.
And that became a viral video.
Right.
But the truth of the matter is that the bigger import would be from this export, would be for the world at large in terms of reimagining the condition of the poor and directed and targeted subsidies where there's no leakage. Leakage is not just a phenomenon that the former Prime Minister of India, Rajiv Gandhi, pointed out, it's a global phenomenon.
Absolutely.
Because the gap between an intended service and its final distribution to the recipient, so that all that needs to be plugged, especially in the African belt, all through.
And debt.
And debt.
Debt being a major problem. I want to come to that because we discussed this morning with Chinese Premier not making it and sending a representative in his place. The talks around debt restructuring, how that's going to come through, that could, you know, how easily will that happen? Will there be obstacles to that? What are we expecting?
No, we haven't had any clear trajectory on that yet. The fact that it's top on the agenda is important, but you know, I think it will take many more sessions to finally get India's perspective rightly in the place. What is at the bottom of the dispute? You know, China is using debt as a colonizing factor. I mean, this is the new colonial force, say our own immediate neighborhood. It is using debt as a lever to occupy that territory illegally, at least through the mind space, and then, you know, using that opportunity to say that, well, you know, I want to control you, and they have the money to do it. And there is distress across our neighborhood. In that sense, how do you mitigate their debt and how do you manage their debt is going to be a challenge. While as India is pushing for, you know, one-time redressal so that, you know, these countries are free and they have true freedom on their own. On Nirmala Sitharaman's perspective, I think one point that I think has missed the agenda. I had spoken to Amitabh Kant right at the start of, you know, the G20, so to say, tempo in India. That was, I think, January of 2023. I had asked him specifically, is terror, you know, funding on agenda for G20 presidency, which I thought should have been a key subject. He said it's on the finance track. So finance track is what Nirmala Sitharaman is driving. I didn't see that being mentioned. So I think, you know, maybe it is not exactly there or it is there in the
terror financing I think was mentioned in that 20-minute address. The chunk that we played did not include that. So terror financing is very much there on agenda.
I'm happy that it's come back to the agenda.
And closely linked to that, of course, is also the cryptocurrency agenda.
Yeah, tax evasion, cryptocurrency.
So tax evasion, cryptocurrency, terror financing, I think all of these fall under this one larger ambit. But coming back, I think, to debt restructuring first, you know, I think what China has done in the neighborhood is not very different from what, let's say, the French had done to its colonies in Africa.
That's
so
why
control of ports.
colonization.
You're right, absolutely. So just putting that in perspective, that we had, you know, countries like Gabon, which are right now under this massive siege, a coup, and they had their ports controlled by France 50 years after the French had actually exited the continent, not just the country. So that is as far as restructuring goes. I think it's absolutely in India's interest right now to ensure that India bats on behalf of other emerging nations when it comes to their debt crisis, and that is something which is going to be counterproductive for China. Now the whole challenge is that in the absence of Chinese Premier Xi Jinping here in India, would those discussions actually ever get fructified? Would there be a final sign-off in G20 or not? To my mind, seems unlikely.
And also there is a bigger problem, Karthik and Shweta, you know, between a bilateral agreement and a multilateral.
Absolutely.
See, ultimately, say for instance, Sri Lanka, with fairness to them, they had a major crisis, a major economic crisis. So they went out to China, China helped. India also put in some effort. India is not treating it like colonizing with a $1 billion aid, but China is looking at it that way, and Sri Lanka
getting access to the port, getting access to you know, any other minerals, mines, run the country.
Yeah. So in that sense, you know, I think there is a limitation that G20 imposes in actually settling such issues, where there is a debt relationship between a country X and Y. So, you know, a multilateral forum can only put in a ideological framework. It cannot, beyond that ideological framework, create a settlement. That's where the trouble is. I just wanted one last point on G20. I think what we've been discussing, the Indian perspective or the Indian model in G20 has been unique in many ways. I think, you know, we're not overstating or being over optimistic, but one fact needs to be iterated and asserted. I think I've been having this chat with Kranthi even earlier. When we did the last G20, it was Bali. We knew one city. G20 presidents in India, we have known 220 cities, including the big landmark G20 Summit we did in, you know, in Northeast and in Srinagar. They have become a reference point, you know, globally now.
Right.
So, and Prime Minister talked about that in his PTI interview also. And China is resenting both. Pakistan is resenting the Kashmir G20 Summit. So in that sense, India has already achieved in a limited manner what it aimed to achieve.
So but I think while we are saying everything great about what India has done, I think India is also going to be pushed to the wall a little bit, especially when it comes to talking about exporting our DPI. They'll say, hey, open rice exports back to the world. Right?
In fact, there's been a common discussion now for a while in foreign press.
About imports, I think again, you know, this whole laptop ban or license Raj in some form coming back.
I think licenses will come back to haunt us.
There's going to be something
but on rice, we have allowed it for Nepal and Bhutan. We believe that, you know, we're using it as a geopolitical tool. or a geo-economic tool.
Okay.
So we have opened it for a couple of countries, which suits us in the immediate neighborhood.
You know, I think we
Singapore
should
and Bhutan, if I'm not
absolutely take
mistaken.
this discussion on once again tomorrow, perhaps. We've run out of time. As much as I would like to have this discussion up and more, we'll have to wind up. Up next, the grounding of Go First has once again put spotlight on state of affairs in the aviation sector. Why do some airlines in India struggle to stay afloat, even as others are expanding at fast clip? Watch this Newsline Plus documentary to find out. Imagine an airline going down.
This is not just a Go Air or an Indigo or even Air India issue. This is a global aviation issue.
Flight tickets are going as high as 2x, 3x, 4x, 5x.
How I see it is that I see some bit of capital infusion probably coming in. Some bit of bailouts probably.
Where we are today, I think it's not just bumpy, but the turbulence is severe.
It's a very difficult situation because at one end of the spectrum, you see record number of flyers queuing up and taking flights every day. But at the same time, customers are paying through their noses. Inflation in India is in the range of about 5.2%. Prices of air tickets are not going up by 5%, 10%, 20%, 30%. Flight tickets are going as high as 2x, 3x, 4x, 5x.
The bigger issue here with respect to why airlines are in this current situation and predicament is that we have globally and even in India seen this surge in dramatic requirement and demand for air travel. Now when you have this exponential demand, you need more aircraft, more engines, more pilots, more crew, and a more stronger ecosystem. Let's not forget 12 months ago we saw airports being completely congested with, even now it takes you 3 to 4 hours to check in. That shows that the demand for air travel has risen up. A lot of this leads to everybody forcing something in the market, forcing an aircraft, forcing a product, forcing a service, forcing a software. And some of these aren't the best, they're not tested, they're not reliable, they're not proven. But because the demand is so much, we just go ahead and induct. And where we are today is what we're actually seeing is signs of growing pains and the sector overheating.
As the sector heats up, imagine an airline going down. That's exactly what happened with Go First on 2nd of May 2023 when it filed for voluntary insolvency.
So Go First, when it was in operation still as late as end of April 2023, commanded a mere 7 to 8% of market share. One would think it's not a significant share, it's a very small chunk of the pie, with the lion's share being with Indigo. But now it seems with Go First going down, other takers are eating into that pie with doubling, tripling of airfares. Now, this is not something that was expected, but what do? You've got the demand-supply equilibrium being met at a much higher point in the graph. You still have enough demand, but supply has reduced because of the number of aircraft in the sky and the sectors being flown reduced drastically.
The issue that we've seen most recently with Go Air centers on them expanding with the Airbus A320neo, which in turn resided on a completely new design of an engine which wasn't really effectively tested or proven in our environment.
US engine maker Pratt & Whitney did not serve Go First with repairs and replacement of engines. This resulted in grounding of 50% of the fleet. Now, how does an airline operate with only half its fleet and yet make ends meet? Obviously, a financial crunch begins to bite.